With me, I have Makwe Masilela. He's from Makwe Fund Managers. Thanks for joining us, sir.
Pleasure.
Am I exaggerating to say that we could be at the precipice of a trade war?
You are not, and I think even the likes of the IMF president, they've indicated this is not welcome. The likes of the European Union, everyone doesn't want to see that happening. But it's just so unfortunate that what happens to be what we call White House chaos is becoming the financial markets problem, And remember, the guy was more of a senior advisor, and from the Wall Street itself, and he was more of a buffer, And I think most institutional investors are saying, this is going to go ahead. We know we don't have the detail of the plan, but we are certain of the direction. So hence we see what is happening. It managed to spook the markets, including the currencies worldwide.
We see that Asian markets were heavily in the red. We are in the red as well. European markets, same. Now, that announcement about Mr. Cohen's resignation only came out after US markets closed. So do you expect that we're going to see quite a violent reaction on the US markets?
By all means, especially if you see the futures in the US, they're already down as well. So it tells you that they're going to definitely open down as well. And it will take off or take from what is happening with the other markets, worldwide. And bear in mind that even the Mexico itself, which we see more as a proxy to all these things, because they're the guys who are more into the trade side with the US. They're also taking a serious knock. So the rand itself as well is not doing that well. And I think the US dollar to the euro is probably eyeing to touch almost the 130 or the 128. Reason being, we know that the dollar weakening, then thereafter the euro will strengthen. And fortunately, South African rand tends to follow the euro as is our major trading partner. I think our only hope, and also for the US, is what's going to be happening with the new president of the Federal Reserve. I think he can maybe apply a steady hand, try to make sure that the rates, as we expected them to increase 3 to 4 times, maybe they don't increase at that rapid rate. I think probably that will be our only hope. That's if the tariff things definitely go ahead.
All right. And in terms of the local news yesterday, GDP number, that was very good news. 2017, we saw growth of 1.3%, which was higher than expected. My colleague Nzinga asking, what kind of impact this is going to have. Today on the markets, we're seeing red, but the fundamentals are that things seem to be looking up. We had the business confidence index come out. It was slightly lower than the January number, but still well above 95. So what do you think about the fundamentals, and can we see more momentum on our local market as a result of the future prospects?
Our prospects look okay. Remember, people tend to spend based on the confidence. You look at the business confidence, you look at the consumer confidence, they seem to be holding up, and I think that's the most important thing. But yes, there will be some headwinds going forward, and yes, we know people are happy with the new leadership, they're happy with Cyril, but it's a question of, is the guy going to be able to implement what he promised? And for me, I think the test will be when it comes to the National General Council, which tends to happen in June, July, because of the election next year. I think if he can manage to, to hold more power from that angle, then I think it will give him, that luxury to be able to implement things that he needs to implement. Bear in mind that the guy didn't win outright. He still has to play a balancing act. But if they manage to go through the National General Council, definitely that can give him some form of comfort going forward, because we definitely need to see him start doing things. And we passed those times of we'll do X, Y, Z. We need timelines. We'll do X, we expect the following kind of results. And I think that's what the likes of Moody's will like to hear when they make their announcements on the 23rd of March.
Of course, Moody's doesn't have the benefit of knowing what's going to happen at the NGC in the middle of the year. But based on everything that has happened, the SONA, the budget, the political transition, etc., and that good economic growth number, do you think that we've managed to avoid junk status?
I think we did manage to dodge the bullet to some extent. And I think given that what's happening with the state-owned enterprises, the reshuffle as well, we seem to be showing them that, we've got things now in our control, we'll be able to implement. But like you said, the taste of the pudding will be in the eating.
Okay, let's have a look at one stock, Impact. It's a paper and plastics packaging business in South Africa. They came out with their annual results for the 12 months ended December. Their profits are down substantially at 457 million rand compared to 784 million at the end of 2016. Return on equity employed came in at 7.7%, while the previous number was 14.2%. Now, the reason I'm making these comparisons, they seem to have very low metrics relative relative to what they did last year. What do you think of this company and their performance?
Bear in mind, 89% of their profits is local, so the local demand was not too impressive because of consumers. We know consumers in South Africa have been struggling, and worse off, what we call the regions where we grow fruit, the likes of Eastern Cape and Western Cape, they were affected by drought, so that also impacted on them. And there were some increases when it comes to some of the paper waste going forward, but local demand was not there, because if you compare demands from other countries, African countries, it was much better. But given that 89% of the revenue is made back home here, if there's no demand back home here, then unfortunately it's going to impact them negatively.
They do have some investments, so are they investing elsewhere?
In Africa, but as we hope the capital investment, which is about to come to an end, will be able to pay off going forward. And them trading at a PE of almost 15 and a dividend of almost 2.7, I don't think it's a bad stock, only if the capital investment they've made managed to start paying out going forward and consumer demand starts picking up. But bear in mind, with consumers, you also have a VAT increase, so that's another story.
It really is. Thank you so much for your time and insights, Makwe. Thank you very much. That was Makwe Masilela. He's from Makwe Fund Managers. After a short break, Nzinga with more business news for you.